Hey guys, my name is Joseph Graff and I am a stock market investor. I've been investing since about 2017, in March of 2017. I use the Robinhood app to invest. Robinhood is a commission-free stock trading platform that both has a mobile app as well as a web platform. I really like the app. It's really easy to use. It has a really useful user interface. And in today's video, we are going to be looking at my Robinhood portfolio. I'll show you guys a little bit of what I'm invested in. I'll show you my top 4 holdings, and I'll also show you my portfolio's overall performance. All right, so here we are in the Robinhood app. I'm actually using this app on my iPad right now. So as you can see on the main screen, it tells you how much money you've invested and what your equity is right now. So right now, I'm up about 15% all time. Like I said, I started investing in March of 2017, and this tab right here reflects my returns to date. It looks like I'm up about 15%. You all can see that on the year, I'm up about 10.5%. Over the past 3 months, I'm up about 3.5%. And over the past month, I'm up about 1%. So as you scroll on down, you will see there's a little section with news. Usually any stocks that you own or any stocks on your watch list, if there's any big news about these stocks, you'll see it in this. You'll see the news in this news section right here, and then they link to an article that you can take a look at to read the full story. So the 4th largest holding in my portfolio is Visa, and I'll show you guys Visa here. So Visa is a credit card company. They make money pretty much on any transaction whenever somebody uses one of their credit cards. They also make money when people don't fully pay off their credit card balance at the end of the month. They charge interest on that balance. And yeah, that's pretty much how they make money, through making money every transaction that their card is used and on those interest payments. So over the past 5 years, Visa has done very well. They're up 226%, as you can see here in this graph. Over the past year, they're up about 27%. The last 3 months, 12.5%. And the past month, 3.3%. So I currently own 3 shares at an average cost of $120 per share. And Visa is now at $179 per share. So that reflects a return of about 49%, which I'm very happy with. Visa is certainly considered a growth stock. I think as the world continues to move away from cash and more towards the use of credit cards and debit cards, they will continue to grow. That was one of the main reasons I bought this stock. They are either the biggest or one of the 2 biggest credit card companies. I'm not sure if MasterCard is bigger than them or not. I believe Visa is bigger, but I think they will continue to grow, not only in the U.S., but also globally, as there are just more and more countries that have people who are using credit cards more and more. So Robinhood will show some basic stats about the stocks that you own. On the left, it'll just tell you a little bit about the price and what it's been over the past day, the past 52 weeks. You'll see the volume of shares traded. You'll see the average volume. You'll get information on the market cap, the PE ratio, and the dividend yield of these stocks. So the next biggest holding in my portfolio is Apple. Now, the reason I bought Apple is because I use a lot of their products. I'm a firm believer that you should invest in companies that you like and whose products you use, and Apple's a perfect example. I have an iPad. I'm actually recording this video on an iPhone, and I just really like Apple's products. So Apple over the past 5 years is up about 113%. It's only up about 6% over the past year. It's actually down slightly over the past 3 months, but it's up almost 2% over the last month. So I purchased my shares of Apple at an average cost of $178.29. Apple is now at $202, $202.31. So I'm up about 13.5%, and that does not include the dividends that I have received. A little more information about Apple. Their PE ratio is about 17. Their dividend yield is 1.2%. Apple is kind of in between a growth and a value stock. I believe that they have some more room to grow, and I don't think their business model is fully developed yet, as they're introducing new services such as Apple Music. They have a variety of cloud storage options, and I think their business model is slowly turning from a product-based model where they sell products like Macs, iPhones, and iPads, to where a significant portion of their revenue is coming through the services that they actually offer their customers. So something else I'll show you, since Apple is a dividend-paying stock, is if you scroll down to the bottom of the screen, you'll see some history. And as you can see, Apple has been paying a dividend of about 77 cents a share was their last recorded dividend. So since I had 3 shares, I got a total of $2.31. Here in this history section, you can also look at the dividends you've received. You can look at the shares you've sold. You can look at the shares you've bought, and if you do any sort of options trading, you can also look at that. So now we'll look at the second biggest holding in my portfolio, which is Chegg. So Chegg is a online service that offers both textbook rentals, and they also offer a study support, kind of not really a tutoring service, but you can go on there and get your homework questions answered, and they also have a bank of these homework answers. So Chegg's been a really useful service for me. I use it a lot to study for my tests, and it's really nice if I ever get hung up on a certain problem. I can look and see how someone else would have solved it and use that to study. So looking at Chegg, over the past 5 years, they're actually up 625%. Over the past year, they're up almost 50%. Over the past 3 months, they're up about 15%. And over the past month, they're up 9%. So scrolling down a little bit, I have 16 shares at an average cost of $36.42 a share. And since Chegg is now at $43.33, I am up 19%. Chegg is certainly a growth stock. They have a lot of potential to grow in the future. I think I read somewhere that it's something like less than 15% or maybe less than 10% of students use Chegg, and a lot of analysts think there's opportunities for them to grow that number in the future. So yeah, that's Chegg. And the reason I purchased Chegg is that I use their service. I think their service is very valuable. And as I mentioned earlier, I like to invest in companies whose products or services that I use. Now we'll go on to my largest holding in my portfolio, which is Waste Management. So Waste Management, just like their name sounds, is a company that collects and disposes of waste. They do this on both a residential and industrial scale. So they may be in charge of picking up your trash in your neighborhood, but a lot of companies and businesses also purchase big dumpsters. And when they fill up those dumpsters, Waste Management will come pick them up and dispose of the trash. So Waste Management over the past 5 years is up 163%. Over the past year is up 42%. Over the past 3 months is up 10.7%. And over the past month is up 0.3%. So I own 7 shares of Waste Management, and I bought in at an average cost of $92.30. That leaves me with a total return of $116 and that leaves me with a total return of $171.52, which is 26.5%. Waste Management is also a dividend-paying stock. They pay 2% dividend is what Robinhood says. I'll scroll down here and show you the dividends I've received. So I've received dividends for $3.08, which is about 50 cents a share. So Waste Management I really like as a company because we are always going to have waste and we're going to need a place to dispose of that waste. So I think Waste Management is a good company to own in a recession if the market was to go down, as it meets a need that people are always going to have regardless of how the economy's doing. Now, you could also argue that when the economy's down or in a recession, that people use less goods, companies might produce less goods, so there may be less waste, which then would impact Waste Management's profits. And I think that's a fair point to make. But I do think in general, the amount of waste that is generated stays pretty constant, and I think Waste Management does a good job of offering services to dispose of that waste. Another thing I like to look at for stocks is I like to look at their earnings per share. So some smaller companies and newer companies will have a negative earnings per share just because their business model isn't quite yet profitable. So I'll give you an example of Uber. I think Robinhood should show this. Yeah, so Uber actually lost over $2 per share last quarter, which seems like a lot, but the reason people still invest in stocks like Uber is that they see a potential for stocks like Uber to grow and eventually be profitable companies. I generally prefer to invest in companies that have a positive earnings per share. The reason I chose to invest in Uber is because I think that they have a lot of potential to grow into a very profitable company one day. I think a lot of people use their services, and I especially think if autonomous driving ever becomes a thing, then they have the potential to make a lot of money. All right, well, I think that about wraps it up on my video for today. I've included a link in the description of this video, and if you go through that link and sign up for Robinhood, then you actually get a free stock, and I also get a free stock. So, hopefully you found this video useful. You learned a little bit about the Robinhood portfolio. You got to take you learned about the Robinhood app. You got to look at a little bit at my portfolio, see what I'm invested in, and I appreciate you watching my video, and I will see you next time. Thank you.